Hello, my name is Will Trayford and welcome to the deVere live webinar series. Our goal throughout these webinars has been to inform and educate the international community across Asia. And today is our 13th webinar, and I'm delighted to be welcoming Chris Frame from GetGround to be talking about building an efficient property portfolio. Now, before I hand over to Chris, I'm just going to run through what the format is going to be for today for those that haven't joined us before. So what we're going to be doing is, first of all, we want to know your opinion, who's listening in today, whether what your opinion is on looking at property investments and what's important to you. We'll then hand over to Chris, who will go through a presentation. And throughout that presentation, I'm sure you're going to have questions. So what you'll be able to do is, at the very bottom of the screen, you'll see a chat box. Okay? In that chat box, select all panelists and attendees, and you can throw your question in there. Everyone will be able to see the question. It'll inspire more questions as well. And what I will do at the end of Chris's presentation is I'll put those questions to him and he'll answer those live. Then after the Q&A, you might want to be thinking, okay, that's great information. How do I act upon that? How can I get more information about what Chris does or about anything you've got to do with property investments? And we'll give you the opportunity to reach out to us as well. Okay, so with that, we will get on with the first poll. So when looking at a property investment, which area is most important to you? Is it growth? Is it income, tax efficiency, or something else? So select one of those. When looking at a property investment, which area is most important to you? Growth, income, tax efficiency, or other? And I'll leave that up there throughout the presentation for you to do that. Now, Chris Frame, if you want to turn on your video and your mic. Chris is the VP of Growth and Business Development at GetGround, and I'll allow him to introduce GetGround. He's got a long history working in property investment in general, so we're also going to be quizzing him about his opinion on the property market. So, Chris, if you want to turn on your camera, there you are.
That's now working.
Over to you, Chris.
Fantastic. Well, thanks, Will, and yeah, thank you very much for obviously hosting this evening, and thank you to everyone for giving up a little bit of their time tonight to listen to myself and Will talk for a little while. Good evening. As I mentioned, or as Will mentioned, I'm Chris. I'm the VP of Growth for GetGround, and I lead our business in both the UK and indeed our international markets. Personally, I'm based in Singapore. We've set up an office here, and I've got a team based out of Singapore. We've also set up an office in Hong Kong with another small team based there. And both of those offices are there to support and enhance our headquarters, which are based in the UK in London. Okay, so it markets when we can as well. So looking forward to coming to Shanghai and meeting in person indeed. So in terms of GetGround, hello.
Oh, I think we've just lost your presentation there, Chris.
There we go. Sorry, I'm not sure what happened there. Can you see that now? Sorry.
Yeah, we can see that now. That's fine.
Great. Sorry about that. Not sure what happened there. So, yeah, just to reiterate, we specialise in the setting up and the running of UK limited companies for the sole purpose to purchase buy-to-let properties in the UK market. And it's a very key point, that is, that we are only there to really help investors, those that are looking to rent out that property, and to therefore help you enhance that investment further. Okay, and I'll come on to a few more details as to how that is possible and how this structure helps that. All of the limited companies that we create have very high quality legal documentation associated with them. They've all been produced and verified by a company called CMS Law, a prestigious law firm in the UK, and in fact the UK government lawyers. All of the companies that we create are tax efficient. And again, I will come on to explain a little bit more about that during this presentation. And they all work very, very well with mortgage lenders. And again, I'll come on to that side of things as well in a little bit more detail as we proceed. Essentially at GetGround, we are making the many advantages that are available and that are available to investors that come from purchasing via a UK limited company structure more accessible to all investors and providing a far more cost-effective solution than the traditional alternatives. Okay, and a key part of that and the financial benefits of that is that we have audited tax examples that highlight for non-UK resident investors an increase in post-tax profits of 52 to 66%. All right, and I'll come on to that in a little bit more detail. Okay. Now, a big part of my role, and indeed the team that I've set up in both the UK and out in Asia, is one of education. So educating the market, educating clients and investors as to why they should look to use a limited company structure. The one that tends to get the most amount of attention is the fact that it will help you enhance your investment and therefore maximize your profits. And I'll come on to the tax efficiencies which create that on the next slide, because I think it's well worth just focusing a little bit of attention on those just to explain where that 52 to 66% increase in post-tax profit comes from and how those efficiencies help you from a non-UK resident perspective. And indeed, the advantages do apply if anyone is in the UK and listening to this particular webinar. But at GetGround, we take a very holistic approach as to why an investor to use a limited company, and those tax efficiencies and those financial benefits are one of a number of reasons why investors should and potentially do consider using a limited company structure. Other advantages include there is a reduced personal liability. Now, what that means is that we create a separate legal entity. That limited company that we create is separate to you as an investor. And therefore, its assets and specifically, and perhaps more importantly, its liabilities sit with the limited company and not you as an individual. Now, we've seen an awful lot of clients, particularly in the last 3 months, given the unforeseen circumstances surrounding COVID-19, have felt very reassured by using a limited company structure for that reason alone, the fact that it's helped reduce an individual's liability. And therefore, if there are any scenarios that do arise unexpectedly, those liabilities are separate to that of the individual. The financial benefits apply whether you are buying on your own or whether you are buying in with multiple partners. However, a limited company structure is a really good mechanism if you are buying with multiple persons. Now, I've already mentioned the limited personal liability that comes from owning in a limited company structure, but one of the other advantages when buying with other persons and other people and other partners under a limited company structure comes from some of the legal documentation that is associated with that limited company. Now, one of the legal documents that we will create for you, and perhaps one of the most important with that, is a shareholders agreement. And that essentially details what you can and cannot do as a shareholder. So it really provides far greater security, both in the structure and the partnership of that property, as well as helping with that reduced individual liability. It is also a mechanism that has been used a lot, particularly for clients in Asia, I would say, because it's a really useful mechanism that helps with greater flexibility to improve estate and inheritance planning. Okay. Again, I'm very happy to talk about specific examples and perhaps case by case with this, and indeed answer any questions on that. But essentially, inheritance tax does still apply when you use a limited company, but there is greater flexibility when it comes to the gifting or the passing of shares than there is of individual assets. And that's where the greater flexibility comes from and why many will look to use this structure for any investment purposes they're looking to make. And then, as I've said before, there is a really well-developed mortgage market. So last year alone, there was over 30,000 individual investment properties were purchased in the UK via a limited company structure. And as a result of that, many mortgage brokers, many mortgage lenders target growing of the mortgage market during 2019. We work very closely with a number of partners. I know that deVere themselves also have mortgage specialists as well who we've worked a lot with, and they've certainly been able to help with financing. And we also, because we specialize in these limited company structures, we've developed some really good, really positive partnerships and created a really sensible network that will help facilitate any financing needs that are required. And one of the latest updates we had was that we've got access to over 520 different mortgage products now available that will lend to limited company structures. And the great thing, particularly in the last 48, 72 hours, is that we've seen lenders returning back to the market, both actually when it comes to personal lending and also that involves limited company structures. So we're just starting to see lenders returning to the market, creating a little bit more confidence in the UK property market, which is great to see and really helpful, helping to drive that investment and help facilitate those investments as well. In the personal ownership route and the GetGround ownership route. Now, this assumes multiple scenarios and a specific situation, and I'm very happy to share that details with you as investors as well. But on the next slide, I'm just going to talk about where those financial benefits come from. And as I mentioned, a lot of that comes via the use of tax efficiencies, but just want to really give a little bit of detail as to where they come from. And they exist throughout the purchase process, both in terms of the purchase itself, during the ownership period, and then upon exit of this investment, okay, on sale of the property. Now, a common misconception is that when you buy via a limited company structure, that there would be an increase in the stamp duty associated with that purchase. Now, stamp duty is applicable on all UK purchases. However, in a limited company structure, when buying for investment purposes and buy-to-let purposes, there is no difference between the stamp duty costs in your own personal name or via a limited company structure. So essentially, from a financial perspective, there is gain or no disadvantage when it comes to a limited company structure. It is just worth noting that the reason why that misconception does tend to come about is that if you are buying a property for your own use, i.e. your own residence, and you do use a limited company structure, then there will be an increased stamp duty tax applicable. So that's often where this misconception comes from. But as I mentioned at the very beginning, GetGround are really focused and specialize in helping investors, for those that are looking to rent out to third parties. And as long as that is the case, there is no difference in stamp duty costs in either personal or limited company structure. And then it's during the ownership period, there are two significant financial benefits that arise by holding a property in a limited company name. Now, in the UK, any asset that is held that produces an income, you as an investor or as an individual will be liable to UK income tax. That is regardless of your nationality and regardless of where you reside. The only factor that matters is, are you a UK resident or a non-UK resident? And I will come on to that on the second point. But essentially, any asset that produces an income, that individual will be liable for income tax. Now, it used to be the case that in your own name, you would take that income and you could offset your mortgage interest in that income and therefore reduce the amount of income that would be liable for income tax. Now, unfortunately, the UK government have removed that as a benefit now. Now, given that the mortgage cost typically is the largest associated cost when it comes to investment property and buy-to-let property, to not have the ability to offset that against your UK tax bill has quite a significant impact on the amount of income that you are now liable for tax upon. Just to put that into perspective, a common scenario, if you had a rental income of £1,000 per month and a mortgage interest of £600, it used to be the case that £600 could be offset against the £1,000 income, and therefore the liability would be on £400 per month. However, as I mentioned, that's now been removed and you will be liable for income tax on the full £1,000 a month rental income that asset generates. However, in a limited company structure, you still have the ability to deduct that mortgage interest from your UK tax bill. So it creates a far more efficient structure. It still enables you to offset the largest associated cost against that income and therefore reduce the income tax liability. Now that actually leads quite well onto the second point, which is that a limited company structure will then allow you to far more efficiently take income out of that property and out of that limited company. I've already mentioned that in the UK, any income that arises from this asset potentially will have income tax applicable. However, non-UK residents, and I appreciate that the majority on this webinar are non-UK residents, there is 0% tax on dividend income when you pay that income out of the limited company. So that is a really key advantage that is available for any non-UK residents who are investing in property that use a limited company structure. All right. And just to clarify again, that non-UK resident, there is 0% income tax on dividend income, again, regardless of your nationality and regardless of whether you reside, providing you are a non-resident of the UK. Now, if anyone is on this webinar that is a UK resident, then there is an income tax applicable to dividend income. All right. Now, in that scenario, we would look at the alternative option that still allows you to very efficiently withdraw money out of that limited company. And it is worth noting that this alternative option is also applicable to non-UK residents, albeit most non-UK residents would go down the route of dividend income. And the second option is via the owner loan repayment route, or sometimes called a shareholder loan repayment. Now, the way that that operates is that if you purchased a property in the UK for £100,000 and you as an investor had to put down a 30% deposit and took out a mortgage of 70%. So quite a common scenario in that regard. That 30% deposit that you put down, so that £30,000 in that scenario, would be viewed by the UK government as a loan from you as an individual to that limited company. And you then have the ability to withdraw income out of that limited company up to the value of that amount at 0% tax. All right. So in that scenario, the 30,000 that you put in, you would be able to withdraw that income out of the limited company at 0% tax. And you're also able to add on any other associated costs, particularly, for example, stamp duty as well. So either way, both options make it very tax efficient when you come to withdraw income from your property. Now, as I mentioned, the simplistic route to for most non-UK residents is actually to do the dividend income, and again, 0% income tax is applicable. Now, I'll come on to the GetGround services, but we will help facilitate and manage all of this for you as well. So please don't worry about that side of things. And then on the exit element, there are again two key advantages. One of them to me is far more substantial, and in my mind, it's actually the most significant financial benefit that is available when it comes to owning via a limited company structure. And that is that there is a reduced capital gains tax applicable when you own via a limited company structure against that of your own name, or so via the personal ownership. Now, again, unfortunately, capital gains tax is now applicable to all assets that increase in value over a period of time. And that again is regardless of your nationality and regardless of where you reside. All right. So unfortunately, since 2015, all property that increases in value will be subject to capital gains tax. Now, if you own that property in your own name, that will either be 18% or 28% of the gain, okay, depending on which tax bracket you fall into. And most investors tend to fall in, particularly on the capital gains side of things, tend to fall into that higher capital gain or that higher tax bracket, so typically that 28%. However, in a limited company structure, there are actually two options available when it comes to selling a property. The first of which is to sell the shares of that property, and the second is to sell that property out of the limited company. But both of those come with significantly lower capital, 10% or 20% capital gains tax depending again on which tax bracket you fall into. All right, so regardless of whether that lower or higher rate taxpayer, there is an 8% capital gains tax saving via a limited company structure. And again, that is on the increase that has made. Now, based on a lot of the research that we've done and a lot of the research that's provided by a lot of the partners we work with, it is very common for an investor to hold a UK investment property for between 8 to 10 years. And in that timescale, it is also historically proven that UK property prices will double in that time frame. So typically every 9 to 10 years, UK property prices double, and in London, it's often quicker than that. So any increase, that capital gains tax can be really quite a substantial amount of money, and therefore that 8% can reflect an awful lot and a significant amount of money, that 8% saving that comes via the limited company structure. And as I mentioned, for me, that probably is the biggest financial benefit that applies for a limited company structure. It is worth noting that the final financial benefit that comes from a limited company structure is that if you sell the shares of the limited company, then the income doesn't have stamp duty applicable on their purchase. Now that gives you as the seller two options. One is that you could slightly increase your price because a buyer would be expecting to pay that amount of money. Alternatively, it would give you a price advantage in the market, all right? Because any other property that was being purchased or was on the market at that same price would, in theory, have stamp duty applicable to it as well. So it would either give a price advantage in the market as you as a seller, or there is a way for you to increase pricing or indeed meet somewhere in the middle with the buyer as well. So potential upside there as well. But as I mentioned, for me, upon the exit, it's that capital gains tax that is the more substantial benefit that comes from a limited company structure. And really, it's those 3 or 4 key criteria that create that increased profit via a limited company structure. It's that ability still to deduct your mortgage interest from your tax bill. It's the ability to very efficiently take your income from your property. And it's the ability to benefit from a lower capital gains tax upon sale and upon exit of that investment. All right. Again, very happy to answer any questions on that and or share the audited tax example that we've got, and equally very happy via Will to sort of set up any calls, meetings, etc., where we can discuss specific cases if helpful to do so. So a little bit about what GetGround will actually do. Now, GetGround are designed, and we as a business are here to facilitate the creation and then the ownership and the management of that limited company without the hassle and the high fees that have typically existed. All right. So worth noting that the benefits that have actually been around for many, many years, and it's often proved a structure that's been a real interest to investors, but one that typically has had 2 main prohibitive factors around it. And that is one of cost, both in terms of the setup and indeed the ongoing running costs. So looking at £2,000 to £3,000 to set up a limited company, and then about the same each year to run that limited company. And then also the time that is involved in that, again, both in terms of the setup and in terms of the running costs or the running time that is needed for you as an investor. And GetGround is here to really remove both of those elements. And our services are all available, and it can all be done online, can all be done remotely. And in terms of what we will do for you, well, we will set up, open a UK limited company. We will register that limited company with Companies House in the UK. We will produce and create all of the legal documents produced by CMS Law. We will also provide all legal documentation property that is involved in your purchase. And then we will also open a UK bank account for you. Now, we've seen many scenarios where for non-UK residents in particular, this has been really challenging. We've had some clients come to us recently that have been working for 8 to 10 weeks just to open a UK bank account alone, let alone actually the limited company structure. Whereas all of these setups that I've just mentioned, we can do that all remotely, all online via our website, via our app, and via our platform. And we will do all of that for you. The limited company, UK bank.
Hi, Chris. Yeah, we lost your presentation again. Yeah.
Sorry, I'm not sure. Sorry, well, can you still? Sorry, yeah, I'm not sure why that's happened there. So we will do that, and then yes, sorry, the UK limited company would be set up typically in 20 to 30 minutes, and then the UK bank account, we would typically suggest 48 hours. It typically is done quicker than that, but sometimes it can just require patient side of things, but all of which we will process for you, and all of that we will do for you. So limited company within 20 to 30 minutes, and then a UK bank account 48 to 72 hours later. All right, and that is on the setup side of things. And then on the management side of things, well, we will actually do everything for you, involve the financial related matters of that limited company and therefore that property. And that includes all accountancy matters. We will do all the tax returns, all the tax filing. We will do all the auditing. We will act as the company registered office address. We will do all of the company secretarial services, and we will have a very secure platform to hold all of the legal documentation that is associated with that structure, and indeed any other documents that are associated with the really secure platform that essentially makes it very quick, very easy to set up the company, and then very minimal time involvement for you as an investor during that management side of things. All right. So in terms of how it works, I've sort of already covered this, but in terms of the setup, actually, as I mentioned, it can all be done via our website, which is www.getground.co.uk. And there is a button there that says click Get Started. And that will take you to the first page, which is to create a profile and an account with GetGround. And that simply involves your email address, a password, and then your name, your current address, etc. It also asks you to upload your AML or your KYC documents, so that is a proof of ID, so for example, a passport, and a proof of address. Okay, and it will also ask you to take a selfie picture on your laptop or your phone, and then our technology will cross-reference the picture with the ID that you provide them. And as I say, that would then create an account and a profile with GetGround. Once you've then found a property to purchase, you then just click the Create Company button, and that all the details that you require are the property that you're about to buy, both the purchase price with your solicitor, with your broker, with developer, with your agent, whoever else is involved in the process, to ensure a very smooth process towards completion. That management side of things, so doing all of the matters that come for you. And again, we would just need you to provide any receipts that are associated to that property that aren't obvious and aren't held already on our platform. And we will then take care of all accountancy matters for you. And as I mentioned, there are a team of people based in Asia. We've got a team in the UK, so very much available on all time zones to help facilitate, and we are very much available on phone, on email, or any other form of communication. Really simple process. And then just finally, just to talk a little bit about our fees and how that works. And we have a very transparent fee structure that typically works out about 8 to 10 times more cost effective than the traditional alternative. All right. Now we have a one-time setup fee per limited company, and that is £500 plus VAT, which is £600 in total. All right. Now, as I mentioned, that includes the company setup. It includes the registration with Companies House. It includes the production of all of the legal documentation. It involves all of the work we will do with your solicitors. And it also includes the setting up of the UK bank account for you. And then in terms of the running costs of that limited company, well, that works out at £20 per month plus VAT. So £24 per month in total, which means you can run that limited company for £288 per year. All right. And as I mentioned previously, typically it would cost £2,000 to £3,000 a year to run a limited company with the traditional methods. So really cost-effective solution. And that comes predominantly from the use of our technology. We've spent over £1.5 million building our platform. We've spent the best part of 3 years undergoing all of the due diligence, all of the regulation. We are fully compliant. So we are FCA regulated. We are regulated with the Information Commission. We're very secure testing and pass all tests with a company called deVere, which are the largest security company. And a big part of the reason that our technology allows us to operate very efficiently is because we are able to automate a huge amount of the process. And comes from the fact that our investors is the UK government. And the reason that they are very keen on what we are doing is because of the transparency towards investors using this very secure mechanism to invest property, that they really like the transparency that we create and the simplicity of it. And the fact that the companies we create only have the one purpose, which is to buy and hold UK property. All right. Now, the fact that they have invested in our business has meant our platform can now plug into both the company's house at the front end, which is where the creation comes about, but also the HMRC, which is the UK government tax arm, and it allows our platform. So that's a really key part we're able to create this solution and make it far more cost effective and enable it to be done remotely without the need to visit the UK or anything else like that. All right. So hopefully that has sort of given a little bit of information about GetGround and who we are and what we do. I mentioned we've been around for about 3 years. I joined the business about the beginning of the year. I've been involved in the property business or the property markets for about 17 years now. My background has been working for developers, so very aware of the way the property market works and indeed to specialize in that UK market. But GetGround is here to really try and facilitate and then help investors enhance those investments, which is why we're looking to create sort of long-term partnerships with the likes of deVere, because we can hopefully help their clients with their investments and really help structure and get the most efficiencies from that investment moving forward. And that's really it from me. Very happy to answer any questions that have come about, which I'm sure that there are some. And as I mentioned, I'm very happy to set up any calls and or share any information that is required that I've mentioned in that presentation.
Excellent. Thank you so much, Chris. I'm just going to stop your sharing for a moment because I think it might be testing the internet a little bit too much because you're cutting out a little bit. So if you want to stop your share.
Are you still there?
Yeah. Can you hear me okay?
Sure.
Yeah, perfect. I think that will probably help the internet a little bit better. Excellent. So what I'll do first of all, just before we jump into some of the questions that have come in and that came in before, is I'm just going to share the results of the poll that we did at the start. So we're looking at what is most important to investing. So the top result was actually income was the most important to people. So I mean, if somebody's investing in a company structure and they want to get income from the property, does that still work for people if they're in, maybe they've reached retirement, or that's the stage of their life where they want to take income from their assets? Is this still the correct kind of structure for them?
Yeah, I think so. I mean, I'm a big believer in the UK property market as an investment tool personally, and I think actually, I suspect in the next sort of few months as we come out of COVID-19, I think we'll see the property markets in particular be very popular because they do provide quite a lot of stability and a real track record of performance, particularly in the UK, from both a rental yield perspective and indeed a capital appreciation perspective. the UK property market the biggest factor behind it is that it is underpinned by a significant lack of supply to the market. So there is a real shortage of property to buy and a huge demand both in the UK and indeed from international clients alike. And as a result of that, relatively basic economics sort of says when a graph is that way, that property prices are going to go up. So that's why there's been a real strong track record of increase in the capital appreciation of UK property. But it also means that it has a very strong rental market. Remains a real strong demand for tenants because there is a lack of supply for them to buy that property. So the UK market has a great kind of middle ground in that regard, where both capital appreciation remains very strong, as does the potential rental yields. And I think that's why it's proved very, very popular over the last however many years, and particularly from Asia, actually, and the Middle East. They've both been very, very active in the UK property market because the fundamentals to a good investment market are there. They are very strong. And I think particularly in light of recent circumstances, it provides a slightly greater security with a bit more of a tangible asset. Yeah,
absolutely. And you mentioned lenders coming back to the market. So is that something you think will give a pickup to the property market, which has been pretty much on hold really for the last sort of 2 months, I guess?
Yeah, it's been a really interesting time actually, because it's worth noting that mortgage lending has been very, very active for many years now. Actually, the ability to obtain finance is very cheap. So the UK bank base rate currently is 0.1%, which is as low as it's ever been. So actually, the availability of money is available, and it is relatively very cheap. And lenders, particularly in the last 3, 4, 5 years, have been very active when it comes to lending, both to UK residents and non-UK residents. And actually, the recent changes to that haven't necessarily been that lenders don't want to lend. It's actually been on the basis that they haven't been able to process applications because surveyors haven't been able to go to sites. They haven't been able to go to developments, or some of their staff, particularly the support side, have been furloughed, for example. So it's actually been the inability to process existing applications that has meant that lenders have slightly withdrawn from the market, as opposed to the not wanting to lend. And I think that's a really key difference to it. And I think with the UK market slowly in the last week coming back, and the fact that the UK property market in particularly has been able to come back with estate agents opening, and developers have certainly increased construction, has really provided a lot more confidence. And therefore as well, it's allowed some of these lenders, these banks, to actually bring back many of those staff that weren't available, and it's allowing surveyors out onto site to actually inspect properties. So we've seen already in the last 48 hours, 2 lenders come back to the market at 75% loan to value and offering pretty competitive rates, which is a great sign. And I think we'll see many, many more of that over the next sort of few days and coming weeks.
Yeah, of course. Well, that is excellent news. So we've had a question come in from Seb. And so how accessible is it to apply and get a mortgage through a limited company?
Yeah, so as I mentioned, really very accessible. We have we specialize in setting up and running these limited companies. So this is all we're looking to do is create these structures for the purpose of purchasing investment property. And as a result of that, we've developed a lot of very strong relationships with both lenders and particular mortgage brokers who specialize in this area. And I know deVere, as we mentioned before, they've got their own mortgage division, and we've done many cases where deVere have arranged the financing for clients that are purchasing via a limited company structure. So it is readily available. It's been a very fast growing market. I think it's probably been something that if you asked 5 years ago, there would have been far less options available in the mortgage market for a limited company structure. Now, one of the main reasons for that is that it used to be very much down the route of offshore entities that were being created. So things like BVI companies, for example, which have far higher risk associated with them, is the simplistic way of stating that. Hence why lenders were less keen to lend to that. And actually that's a slightly separate reason, but that's again why the UK government is very favourable towards what we're doing, because BVI companies and those other offshore entities certainly aren't illegal, but they're often multi-layered. They often are businesses that have multiple activities associated to them. Whereas the limited companies that we create are solely for that purpose of buying and holding one UK property, which means that lenders, or it creates a far greater transparency both for the UK government, but particularly for mortgage lenders. So it's a very simple process for them, where it is limited company, property, loan amount. So it actually works in a very similar way to that if you were buying a property in your own name. They will still do a lot of the underwriting based on the shareholders. So that is the same, just the difference being that the limited company is on the ownership deeds of the property and indeed on the mortgage deeds and takes on the liability itself. I mentioned that, as I say, that there were over 30,000 property purchases from a buy-to-let purpose in the UK last year alone. That was an increase in about 22% from the year before. So it is the use of limited company structures is a fast-growing market. And as a result of that, mortgage brokers and mortgage lenders have innovated in order to serve that market. And hence why we work with a lot of independent brokers. And the last update, as I mentioned, we've got sort of access to over 500 different mortgage products that are available in the market. So generally, we haven't had any difficulties obtaining financing for anyone. And in some cases, we have seen the use of a limited company structure actually help with mortgage financing in some cases. So in some cases, it's been beneficial, but it certainly hasn't been detrimental in any way.
Okay, excellent. So another one from Bebe. So GetGround is essentially a UK-based turnkey company that also fuses to create LLCs to secure everything.
Essentially, it's a great way. That probably should be the opening line of my next webinar. But yes, it is a turnkey solution. We will set up that limited company for you, and then essentially set up everything that is associated with it, and then manage it on the behalf of the investor. So it's a great way of doing that. We specialize particularly in that area. We have developed partnerships that help with other side of things like mortgage broking, etc. And we can obviously, recommend within our network as needed. And many of those partners are actually ones that deVere associated with as well. So, but yes, essentially it's a turnkey solution. And as I mentioned, really just trying to create a very cost-effective solution, and to remove those time-consuming prohibitive factors that have existed when it came previously to limited company structures.
Yeah. Okay. Next one that's come in. If a property is under a personal name now, is it worthwhile to switch to a company now?
Yeah, it's a question get asked an awful lot, actually. The reality currently is that if you have completed on the purchase in your own personal name, it is going to be very hard to justify transferring that into a limited company structure. It is potentially worthwhile having a conversation around that, just to have a look at some numbers, but in most cases, it's very hard to justify. And the reason being is that if a property is completed, the UK government would see it as a sale from you as an individual to the limited company. And therefore, stamp duty would definitely be applicable again, and potentially capital gains tax subject to when you bought the property and indeed the performance of the market since purchase. It's worth noting, if you've exchanged contracts in your own personal name, but not yet completed, then we can absolutely help. And all of the benefits that I've talked about this evening would be available to you as an investor. So providing a property hasn't completed, it is still worthwhile, still available to transfer into a limited company name. But if it's completed, realistically, it's very hard to justify those costs. There are a couple of scenarios where it can be justified, but they really are very few and far between. So to simplify it, I'd say probably not.
Okay, well, that's good to know. I mean, there's a lot of positive. It's always good to know what are the negatives and who shouldn't be considering it. It's also important, right?
Yeah, and we've seen a lot of people, as I say, who have been in that scenario where they've exchanged contracts, but they've now seen that either the benefits of a limited company and or the ease of it, and therefore that's where they've looked to switch from personal into limited company ownership post-exchange, pre-completion. the simplistic way is to exchange contracts in the limited company name. That's the ideal scenario really for everyone. And the main reason for that is that if you do it post-exchange, pre-completion, there will be a small legal cost that is applicable for that. Now, that is not a GetGround cost, that is just the costs that are associated with lawyers who, as we know, tend to charge for most works that they do. But the reason being, in their defense, is that there is amendments that are needed to the contract. So, i.e. replacement of the personal name to that limited company name. So the contract actually would remain the same, but there would need to be an amendment to that. That can be done very simply in one of a couple of options, either assignment, a deed of variation, a supplementary agreement, and they tend to be the most favored routes. But there will be a small legal cost that is associated. That will be at the discrepancy of that particular solicitor you're using. Typically, it's £400 or £500, I would say. So it's still very worthwhile, but just be aware, post-exchange, pre-completion, that will be an additional cost that will be applicable. Obviously, pre-exchange, that cost won't be available, and a solicitor will just operate in the usual manner as if it were your own purchase in your own name. So that's why we tend to recommend, if possible, exchanging in limited company name, but the benefits are available providing you haven't as yet completed.
Okay, I think we've got time for one more question. So Paola's asked, setting up a UK company to buy a property, would the shares be subjected to inheritance tax once they pass to the deceased, from the deceased to the beneficiary?
So so yes, in theory they would. So the shares that are owned would essentially make up part of that individual's estate. All right. So inheritance tax would be applicable in the ordinary way, as it would be in your own personal name. The reason why a lot of individuals, both UK residents and non-UK residents, like the use of a limited company structure is because of the inheritance tax rules that are applicable in the UK. Now, the way that operates is that if you gift an asset or a part of an asset to a next of kin, so commonly children or grandchildren, if that individual survives 7 years after the gift, there is no inheritance tax applicable. So that's very straightforward. And over that 7 years, there is a tapering effect where the maximum would be 40% inheritance tax applicable, and it tapers down over that 7-year period. Now, when it's owned in a personal name, it is impossible to give part of that asset. So you either gift that asset or you don't, which tends to mean individuals have to give up financial control or financial benefit from that particular asset when they make that transfer, which tends to mean people hold on to that property or that asset for a longer period of time and therefore run a higher risk of not surviving that 7-year period. With the use of a company, it is very, very easy to transfer shares and therefore transfer some or part of that asset, and that can be done progressively or in one go, but still retain some ownership, some control over the asset, and also some economic benefits. So probably the most popular scenario we have with this or seen with this is when looking to gift an asset to a young child, and there is then a concern of giving a young child full economic control of an asset and responsibility for an asset. Whereas via a limited company mechanism, you could gift away, for example, 99 shares of the limited company, but retain 1 share, still retain the role of a director or a shareholder in that limited company, and therefore still have full financial and economic control over that asset. So it allows that transfer and that gift to be made far earlier on in someone's lifetime, and therefore more likely that that 7-year period would be survived. And it's that's the sort of why it's a very popular mechanism for that. And again, it might very happy to sort of talk to individuals on that in a bit more detail if helpful, but that's sort of the simplified version.
Yeah, okay, that's good to know. Good planning opportunities there.
Yeah, it's a flexibility part of it, so that helps with the planning side of inheritance. It's certainly not an inheritance avoidance structure.
Yeah, okay, great. I'm afraid that's all we have time for today. Obviously, everybody, that's been a lot of information that's being put out there, and Chris has got a lot of knowledge, and what we'll also be doing is throwing a few questions to him afterwards. But if it's stuff that you want to know more about the company, about setting up a structure, or actually taking a step back and looking at property investments in general, what we're going to give you the opportunity to do is actually be able to reach out and say, okay, I want more information on any of these topics. So just select here, if you'd like to receive more information, how would you like to receive it? Via email, WeChat, video call, phone call, or visit our office here in Shanghai. Just let us know how you would like to receive that information, and we'll make sure we get that out to you. And also what I'm going to do is, after this webinar, Chris has kindly got himself onto WeChat, and so we're going to put him into the webinar WeChat group, and he can answer any questions that do come in. And if you're not part of that group, please speak to whoever invited you, or reply to the email that invited you to this webinar, and we'll make sure that you're added into that group as well. Lots of information there, and we talk about upcoming webinars. And with that, Chris, I'd like to say thank you very much. Thank you for your excellent presentation.
Pleasure. No, thank you very much for hosting. And yeah, as I mentioned at the beginning, thank you to everyone for giving up some time, and happy to answer any further questions as they arise.
Excellent. Thank you, Chris. And thank you all for attending. Thank you for your excellent questions. And also thank you for your donations. Throughout this deVere webinar series, we've been donating to Give to Asia, who've been helping the frontline pandemic response across Asia. Some excellent work, and so thank you so much for your donations. And look forward to seeing you next week for our Millennial Investing Part 2. So thank you very much. Good evening.